Okay, what happened in the last half an hour or so is some of the Asian markets have moved to the lows of the day. Taiwan's down 1%, Hong Kong's at the low, mainland China, Shanghai Composite is at its low, Nikkei anyway was down about 2%. So Asian markets aren't feeling too great. And some of that concern seems to be rubbing off. It was rubbing off on the SGX, and now as we start getting the first pre-open rates, the rates are on the downside. But must say that they're pretty severe right now. So let's just hold our horses. I mean, there's an ICICI Bank down 5%, Axis down 5%, Reliance down 1.5%. So this is just very indicative. Let's wait for things to settle. But yes, there's no taking away from the fact that the market seems to be in a mood to go with a lot of caution despite yesterday's massive, massive sell-off. Let's do one thing. Let's quickly get some trading ideas going with our technical experts before we move on. So Mitesh, what are the picks, stock-specific, that you will go with?
I have more sell calls and most of the stocks, I'm recommending on a mild bounce back to sell. So L&T Finance broke below important trend lines and moving averages yesterday. So if it gives a mild pullback to about 87, short with a stop at 89 for targets of 83. Bandhan Bank, again, I think, very negative structure, around 220, 221, sell with a stop at 227 for a target of 206. And Godrej Properties is the third sell call, which I would recommend selling around 1130.35 with a stop at 1155 for a target of 1090. And on the buy side is Balrampur Chini, which I recommend buying with a stop at 396 for a target of 412.
Okay, by the way, the rupee has opened weaker as well. So 82.12 was the close that we had yesterday. I think the rupee is now at 82.30. So there is a bit of a weakness that you're seeing in the currency too. Don't lose sight of that. Sudarshan, how about you? What would the stock ideas be? Looks like it's going to be a weak start today. Once again, a 100-point knockdown is what the Nifty is indicating. Your thoughts on individual stocks?
This time I'm looking to buy good quality stocks. At some point we have to say, not for the index, but for stocks, at least stocks that are outperforming. I have only one intraday short, that is Bharat Forge, sell with a stop above 825. And then JSW Steel is a buy. The stock is sideways. It's sideways in a market where the Nifty is consistently falling. That's good news. Buy with a stop under 665. ONGC has been an outperformer. It's moving in a trading range. It's reasonable to expect the trading range to break on the upside. So buy with a stop under 150. And Bharti Airtel, again an outperformer. It has strong relative strength. It's weak, but compared to Nifty, it's much better. That's a buy with a stop under 785. All the buys are positional buys, not intraday.
Some buy calls. Sudarshan, Mitesh, thanks very much, both of you. Appreciate you joining in with that perspective. Now, Chandan Taparia is also with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, what trades would you take now?
Good morning, Prasant and Sonia. So if I look at the market setup, we have seen a development that is turning on the bearish side. The market range is shifting lower. Dow has broken the key support of 32,500 zone, which was being respected for a long time. Your CBOE VIX has spiked by around 7%. Now CBOE VIX is near to 26.5. India VIX yesterday spiked by around 21%. VIX is near to 16 zone, which clearly indicates that bears are getting some way in the market. And we have broken the key support of 17,350 and 17,250. So market is opening some more downside, and we believe that till it remains below 17,350, 17,442, the market is opening the downside towards 17,000 to 16,800 zone. Similarly, Bank Nifty, which was holding well to budget day low of 39,400, 39,500, we believe that the low will be broken with hurdle of 40,000. It is opening the downside towards 39,000 to 38,888 level. So one need to trade the market accordingly. Some more pressure could be there looking at the market internal. Now looking at the stock wise, one trade on the buy, one on the sell side. First trade, that is buy on MGL, Mahanagar Gas Limited. This stock is holding well and resilience at the time of market decline, even forming a positive price pattern with some built up of long position. So recommending to buy on MGL with stop loss near to 965. Stock can rally towards 1,035, 1,040 level. Second trade, that on the sell side, we have negative on most of the auto ancillaries. Even heavyweight stocks are showing sign of weakness. So Bharat Forge, we are recommending, as the stock has given a decisive breakdown below 810 level, trading at 4 months lower level with some built up of short position. So recommending to sell with stop loss of 812. The stock can drip down to us 760, 755 levels.
Got it. Okay. Thanks a lot, Chandan. Have a good day. Thanks for joining in. By the way, the pre-opening rates have now settled to a more believable rate. It looks like it's going to be a flat start. The Nifty is down, but not out, down about 14, 15 odd points. Sensex also down about 120 points. It looks like at least the start may not be as gruesome as what we saw yesterday, and then we'll take it from there. But there's been lots happening in the IT space. Of course, with the whole SVB bank fallout, the big question remains on what the ramifications would be on the tech world globally, the startup world as well. But you also have individual stock-specific news for that we want to track. Apurva Prasad, who's a research analyst at HDFC Securities, joins us now. Apurva, first I want to ask you what's happening with Infosys. There are several resignations. You know, earlier it was Ravi Kumar, now Mohit Joshi has stepped down. That's raising a bit of concerns about, you know, what's happening with the management itself and how they could wade through what seems to be a challenging time now with an impending recession. On the stock itself, your view?
Good morning, Sonia. Thanks for having me.
Morning.
So yes, I think they're going through a bit of a transition. However, it's not unusual. We've seen enough in more instances, you know, of similar transitions in the past. So while there could be some near-term, you know, transition-related factors that may have an impact, but I mean, if you look at the deal flow more recently, that continues to be fairly strong. And if you look at where valuations are, since you asked from a stock point of view, I think they're almost near the long-term averages. I think the absolute return potential, in my opinion, should be good for Infosys.
Okay, Apurva, hi. Good morning to you. A slightly wider question. We were discussing this with our earlier guest as well. How should investors look at IT stocks? On one hand, they were anyway battered and bruised over the last 12 months. So there would be some, you know, sort of reason to perhaps bottom fish. But now you're getting this onslaught of headlines from the US. Is this a good time to dabble in? If yes, what kind of companies? Stay away. What's the advice?
It's quite interesting. So you're looking at a peculiar scenario that the terminal growth rate probably headed lower. You have the terminal rate, which is headed lower, the terminal growth rate, which is intact, and probably the near-term growth rate, which carries some amount of risk. So BFSI, in any case, there were some sub-segments where there was cuts in spend, which is particular to mortgage. It seems that could probably expand to some of the smaller and mid-sized banks, which are customers. But you know, case in point out here being that you know, on the medium-term technology transformation spend agenda, those are unaffected. So of course there is a rationalization of spend and projects which are being preferred, you know, which have higher ROIs, those continue. But at the same time, I think the medium-term agenda on tech spend trends, those are unchanged. So I think if you put all these three elements together, I think that's a good way to look at it. And in the context that, you know, with where valuations are relative to where it was about 6 to 7 months back, I think that looks a lot more favorable. So I think we're being a bit selective out here while we are constructive. But I think there are some stocks that offer good absolute return potential.
Making this a bit macro-ish, Apurva, if I can, have you looked at how IT stocks, I mean, do IT stocks have any correlation over long periods of time with US interest rates? I mean, I'm just asking that because if we've seen some really massive moves and in the US 2-year, 10-year, etc., which, and some are saying, well, this is reminiscent of 2018. Back then, the 5-year peaked, made a high, and then we had a big reversal down, and then we had the last Fed rate hike after that. Of course, yeah, so people are drawing parallels. If that were to play out, you think, is there a correlation with US interest rates for Indian IT?
Interest rates, yes, Prashant, most certainly on some of the sub-segments within the portfolio. So like I was mentioning earlier, mortgages most certainly, those are down. You know, the volumes are certainly down, and that does have a bearing. But if you see in terms of, if you expand that, sort of zoom out and look at the last time there was a contagion and what happened, especially in the BFSI vertical, that took them about a couple of quarters to really get back. So the impact was probably prolonged for about a quarter and a half. You know, that's the amount of impact that it took. Environment was very different back then. Most of the larger companies were 1/4 the size of where they are today. And I think, you know, the element out here is that a lot of spend has become more non-discretionary. So essentially digital being more non-discretionary, while historically you would have very high correlation with how the macros have played out. So whether you correlate it with the nominal GDP or the real GDP, I think essentially the fact that more recently when you had instances of slowdown, we saw that bit of a disconnect, and I think that's likely to continue. And which is why you may look at a classic scenario that there would be instances of deferrals of deals. There may be instances of the bookings not converting to revenue.
Sure.
But at the same time, the offset is going to be pipeline expansion with cost optimization deals. So there are a lot more cost optimization deals that have been flowing through. I mean, you just have to look at the BFSI deals that TCS has reported or published the past couple of months. So I think the deal activity continues to be fairly strong. The nature of deals would probably change, and I think that's what's going to continue.
Okay, got it. Apurva, we will, of course, have a lengthier discussion at another time. But for now, thanks a lot for joining in and have a great day. We're heading into market opening, which looks like it's going to be a green opening this morning. So, Sudarshan, perhaps we'll, small mercies here. We'll get a little bit of green at the start of trade. But what do you do then? What's the big call at 9:10?
See, the big call is to look for positional buying opportunities. Consider JSW Steel for a positional buy with a stop under 735. I'm sorry, 665.
All right. And Mitesh, how about you?
I'll go with the sell call Bandhan Bank, 220, 222, sell with a stop at 227 for a target of 206.
All right. Thanks very much, guys, for those calls. Now, Aptus Value Housing is the stock in focus next. The stock, by the way, massively down market, was, I think, up about 5-6% yesterday. Abhishek is on the stock and on the story. Again, that's the momentumizer. Abhishek, over to you.
Well, the momentumizer is Aptus Value Housing because the stock has outperformed Nifty and Bank Nifty over the last 1 month. So if you take a look on a weekly basis, the stock has underperformed Nifty but outperformed Bank Nifty. And on a monthly basis, it's outperformed both Nifty as well as Bank Nifty. That is, it has declined lower than Nifty and Bank Nifty in last 1 month. Volume data is interesting given the fact that on an average, the volume used to be around 2 crores or 3 crores or 5 crores. But in last 5 days, the volume has been ranging between 30 crore to 202 crore. So an average of last 5 days is around 94 crore of delivery volume that you are seeing, or the total traded volume. Monday's delivery volume was around 9.6%. Take a look where the stock is priced at about 253 rupees per share. The stock is trading a little below 20 DMA level of 255.5. Back to you.
Okay, got that. Thanks, Abhishek, very much for the momentumizer of the days. Two more stocks, Sonia. These are from the auto space. Yep. Why are you watching out for Eicher and Tata Motors?
So there's more competition coming for Eicher, and that's why the stock could perhaps, take a back seat. The Harley-Davidson is launching its most affordable motorbike in China, and they will eventually launch it with the Hero JV in India as well. Now, this is the Harley-Davidson HD X350, and the launch price in China is about 3.96 lakhs. But when they come to India, which is eventually with the Hero JV, it will be much cheaper as Hero is looking at higher localization. So the price of the HD X350 could be around 2.4 lakhs. It will still be slightly more expensive than the Royal Enfield Classic 350cc, but still it could, provide a lot of competition in that space and in this premium motorbike space for Eicher Motors. And UBS has put out a note where they maintain a neutral. They have a target price of 3350, which is still above the current market price. So that's on Eicher. But on Tata Motors, they had a corporate day meet in the US, and the takeaways were quite positive, actually. Nomura has a buy with a target price of 508. They say that demand trends are very strong both in JLR and in the commercial vehicle business. They started witnessing some softness in the passenger vehicle business with dealer inventories increasing, but it's not too much to make an impact. The JLR order book remains healthy. The Q1 CV volumes could perhaps be impacted because of pre-buying, but they expect that to stabilize Q2 onwards. So Tata Motors expected to be in the green as well.
Okay, well, just a couple of seconds to go.
10 seconds to go.
Quite flat.
Oh, absolutely. Yeah. And I think we will, we were talking about that, right? How the pre-opening rates first indicated that the start would be in the red, but now expected to be absolutely quiet. So that's the first take. I think we'll take quiet with both hands after what we saw yesterday. It looks like a green start, in fact, building on a little bit at that 17,160 level, up about 9 odd points. The mid-caps as well in the green. So it's a green start, but no major recovery after the sell-off we saw yesterday. What's leading from the front is L&T, ITC, Bharti, Hindalco and SBI Life. So these are the top 5 Nifty gainers at the moment. Bajaj Finserv, Divi's, Hero MotoCorp, a couple of other stocks. Few and far between really on the green side. On the losing end though, it's definitely IT. So you have HCL Tech, that's your big loser this morning. TCS is also in the red, and a couple of other names. Tech Mahindra too is down about 0.3%. M&M Cipla IndusInd Bank down about 0.5% or so. So no big mover at the moment, just consolidating around that 17,150 mark. But now the market is starting to trend in the red. So just keep an eye out on that. The Bank Nifty is dragging its feet once again, down about 60 odd points. IndusInd, Axis Bank are your big losers, Kotak Mahindra Bank as well. And that really is preventing the market from getting above that 17,100 level conclusively. So not a great start after the big fall yesterday. Once again, there's red on the screen, just that it's restricted to about a 20-30 point fall.
Okay, let's see how this goes. Banks have been such a problem for this market, and today is no exception. You'd imagine there would be a pullback. No sign of that as yet. Once again, it's the Bank Nifty that's taking the market down. More on this in a bit. But on the mid-caps, the index is very flat. A lot of the Adani Group stocks have started the day on the lower side. Adani Transmission, Total Gas, Green Power, Enterprises down between 3 and 5% on a lot of these names. Equitas Small Finance Bank is down about 2% to begin with. These are top volume names that I'm listing out right now. So Nazara a while back. Nazara is down about 1.5%. Then we have a couple more names coming to the surface. Sona BLW, after that clean-out trade, continues to gain some traction. 3% up on Sona BLW. Talk about some other movers and shakers on the mid-cap screen. Sequent Scientific is up about 5%. It's recently become quite a volume buzzer. Lemon Tree is seeing some buyers. There's some green on Paytm. Kalyan Jewelers, 2.5% up. Max Health is up about 1.5%. So there seems to be some bargain hunting going on in the mid-caps for the time being. Back to the main screen, and things are even Steven. 8 points lower on the Nifty. There's some buying on an L&T, on Infosys, on ITC, on Reliance. These are the 3 or 4 bigger stocks that are trying to pull it on the upside. But then you have autos dragging, and banks, Prashant, they remain a problem. I mean, for the life of me, I can't understand why people are selling Indian banks so much. But it is what it is on the screen.
I mean, just there's a sentiment rub-off, and I guess risk premiums go up a little bit here as well. But it's not a, I mean, it's a flat kind of open, and a 3-point change after a very large sort of sell-off that we saw yesterday. Unless you have fresh impetus to keep going in that same direction with that same velocity, I mean, it doesn't happen. So I guess a little bit of a pause is what we have, and as I've been saying, I mean, the idea is to wait and watch and not get too perturbed or too bearish with what we've been seeing in these sort of concentrated 2-3 day moves when it looks like everything is gloom and doom. So we will get bounces as well, 10, 13, 14 point higher now. So it's a little volatile, 17,170. Just a few other names. I mean, actually, the Adani Group stocks are down. So this is a bit of a reversal from days of most of these stocks gaining. So Green is down 5%, Transmission is down 5%, Adani Total is down 5%, Adani Ports is down 2%, Wilmar is down 4%, so and Enterprises is down 3% as well. We'd been seeing recovery, solid, steady recovery in most of these stocks for the last many days, which is a little bit of on the other side today. Persistent is down about 3/4. We've got Mahindra CIE, which is down about another 0.25% or so. Varun Beverages is down about 1%, 1.25% at this point in time. Sonacom, I think Sonia mentioned that, is up 3% and has got very large volumes in it, 418 on Sonacom. Paytm is up about 2.25%. If interest rates in the US are at a peak and they've continued to fall, some of the unprofitable will be profitable in the future, in the distance. Those kind of businesses will do well. Will get a leg up at least. Lupin is up about 1.25%. Sequent, we mentioned, Max Health, APL Apollo are some of the stocks which are doing well on the upside with volumes. Volumes are thin. I mean, it's not as if it's a big volume day right out of the gates. Maybe they pick up through the course of the day. But for now, it's starting small.
I just want to mention one thing on Sona BLW, right? It's up 3%, and we did this story yesterday as to how, despite Blackstone exiting entirely, the business is very strong. I mean, it's now become a pure play EV technology player. I mean, at least large part of its business comes from there, and they are growing in that space in a really big way. So after that initial overhang of, Blackstone exiting, the stock is seeing a good amount of a rally today.
Yep, absolutely. At 22 points on the Nifty, 17,175 is where we are at with a 15-point mild up move. Tahir Badshah is our market master today. He's Chief Investment Officer, Equities at Invesco Mutual Fund. Tahir, great to have you with us here. what markets we live in and are witnessing, right? Big, massive moves, especially in the US, and some consequent moves here as well. Mutual funds are getting handed a lot of cash. Last month also, inflows into mutual funds were the highest, were some of the highest. Are you deploying right now, Tahir, or are you waiting? Are you cautious? Tell us how you're looking at the whole situation.
So I've been kind of, conveying this for some time now that, to 2023, at least to me, looks to be a difficult year from a market perspective. And therefore, to that extent, I mean, while we are amongst the flows and, the industry has been once again seeing some recovery as far as flows is concerned, we are moving in reasonably, cautiously. I don't really see any hurry to get into the market in a big way, except barring a few pockets where probably, if the declines are very sharp and then it throws up some specific investment opportunities, either from a valuation perspective or from a growth standpoint, then that's fine. But otherwise, in general, I don't really think there's a market where we need to probably hurry into or rush into, very soon.
Tahir, hi, good morning. So you don't want to rush into this market very soon, but the play this year has largely been on fixed income, and 9 out of 10 asset allocation strategists recommend that perhaps this is a good year to be raising your allocation in fixed income and going slow on equities. Would you do the same? And what is the best approach for the year now, given all the challenges that we have upon us?
So you're right, Sonia, that we are thinking almost alike, and we do really see a situation where probably fixed income, at least from a tactical standpoint, maybe for a year or so, provides a better investment opportunity. We at least get into those specific pockets, whether it is in the maturity curve between 0 to 3 years or 3 to 5 years, which does provide reasonably decent YTMs in any case. I mean, we can lock ourselves into something like 7.5 plus on quite a number of products around this maturity curve, and probably look forward to a possibility of getting some kind of capital appreciation, at least in the middle of 2024, if not anytime earlier. So I think those yields look relatively more attractive, and that part of the curve is something which provides an opportunity compared to the longer end of the curve at this stage. From an equity standpoint, I would say that, well, like as I said, there doesn't seem to be a rush to get in, and therefore the best investment strategy probably as far as equities is concerned is to think of this year as an opportunity from the point of view of gradually building your portfolio, not with the expectation that returns will come into 2023 itself, but this is the year as probably the market grinds down a little bit, or probably we go through a bit of time correction. That will be a time when you build onto your investments, you make your product choices and asset allocation, and look for returns essentially for 2024 and 25.
Tahir, hi, good morning. That's a sobering thought, especially given that you're saying that with the market 10% down from the peak. And I think it'll also be a great lesson for a lot of the new investors who came into the market in 2020, right? This is not a one-way ride. So can you expand on that thesis? So you're saying you wouldn't rush in now, 10% down from the peak. At what levels will that change? I mean, what sort of further correction or valuation levels would you really go all in, let's say? Until we get to that point, how do you start building the portfolio? What parts of the market are you comfortable with? How do you build for, let's say, FY25, 26?
So great question, Surbi. What is running through my mind, at least, and this is what probably I've been kind of maintaining for the last few months, is that we're probably going to see the lagged impact of interest rate hikes, which happened around the world as well as in India in 2023. I mean, it'll manifest in probably certain idiosyncratic ways, like it has happened in the case of some of the problems that we witnessed in the banking sector in the US of late, or probably in the form of actually a slowdown. I mean, consumption-led slowdown, both globally as well as we already essentially started to see signs of it in India in any case. So I think this will be the year of that, readjustment that we will probably go through. What was probably supposed to happen or was expected in 2022 might actually unfold in 2023. So I think that is the reason why I say that you're better off being a little slow in terms of your allocation, or probably from the point of view of your money into the market. I think India faces a bit of a extra challenge that we have been at the higher end of the curve as far as valuations are concerned. probably brought upon because of our significant outperformance in 2022. So I think we are probably starting to give up some of that. We're seeing that in the last 3-6 months that we are somewhat, a little more under the weather than probably some of the global markets. And the third thing is that we are witnessing, we've actually had a lot of our growth actually come from one part of the economy, which is consumption, and that to high-end, mid-end consumption. Bulk of the growth has been driven by that. We've not really seen much at the bottom end of the pyramid. And we don't really see much of levers that is probably going to change, especially in an environment where interest rates are probably going to remain elevated for some time. I think the part of the market which I still like is the one which is associated with the industrial cycle, the manufacturing cycle, the investment cycle. I think that is where probably the surprise element to my mind for domestic investors as well as global investors alike is going to be a little higher compared to what it is probably on the consumption side. I think that is a more undiscovered part of the India story, I would think, compared to probably the consumption part.
Okay, just one final question then from my end. And by the way, the market now is starting to fall a little bit. So let's just, not take our eye off the screen. The Bank Nifty is now down 150 points. The Nifty may not show it so much, but beneath the surface, there is quite a bit of damage. The mid-caps as well are down over 100 points. Just before we let you go, Tahir, do you foresee a situation where the cuts could get much deeper from here? I mean, are we looking at a large-scale sort of recession playing out globally and taking most equity markets down with it, perhaps even more than a 10-15% fall? Could that be your base case?
No, that's not my base case at this time. Okay. I mean, like as I said, I mean, some of these, the impact of interest rate hikes in the world will somehow manifest itself in somewhat unacceptable forms during the course of 2023. But will it be of the type which will probably take down growth substantially? I don't really think so. I think, and in that context, then probably India has a better chance because you still have one part of your economy which is doing quite well, which is the manufacturing, industrial investment part of the economy. So I would like to at this stage think that we're down. Yes, you rightly said we're down about 7-8% from the peak, and what I'm probably expecting is a somewhat similar magnitude of correction, maybe going forward as well. So you end up another 7-8% lower at that point in time. You even correct in terms of your valuations, and investment opportunities probably become open up at that stage. So I'm not really looking at very deep cuts in the market to precisely answer your question.
All right.
But this will be a year when the market will drag and it'll kind of be completely indifferent. We'll probably see a combination of time and absolute correction, I guess.
Okay, a boring market, right? Maybe.
Yeah,
I dare say, which is worse than a falling market to some, but it is not, to be fair. Thanks very much, Tahir. Great to have you with us here. It's always a pleasure speaking with you.
I think people will take a boring market any day, Prashant. People will prefer a boring market to a falling market, I assure you that.
Do you guys remember the market from, I think it was 2010, all the way, we made a high at 63.50.
Yeah.
And we did not cross that for the next 3.5 years, 3.5 years, we just went up a little bit, went down a little bit, nothing. And
just hope it's not that boring, Prashant. But I think, just to get back to that point, a lot of people that I know around me have just thought that this is the Russian roulette, this is it. You put in money 2020 and everything goes up 20-30%. I think the market teaches. And for some people, I think those lessons perhaps would be well learned now.
Yeah, I think Tahir made some excellent points. So, keep it at the back of the mind that this is not 2022. This is a different market. Well, let's move on. The Nifty, by the way, has come up a little bit again. We're up about, 15, 16 points, 17,176. Now, we have someone with us who is exactly the person to speak with when we've got this macro market troubles globally, big moves, especially in the rates market, etc. Shankar Sharma is with us now. He's founder at G-Quant Investec. Shankar, great to have you with us here. Thank you very much for your time. Appreciate it. So, your perspective, Shankar, what we're seeing in the US, does it feel like this is going to get much bigger, or do you think this will get contained? Markets have sold off for a week, and then after that we kind of move on. Something similar to what we saw recently with the UK pension fund thing. Market sold off back then, Bank of England infused liquidity, and life kind of moved on. Your sense, go on.
Right. My sense is I don't think this is going to turn into a large-scale contagion. And, and a bear market is always a great disinfectant. when you have a bear market, which is why I love bear markets. It brings out all the things that have been covered up by, all kinds of central bank-led fraud or corporate fraud or, fraud by domestic governments. A bear market, is very, very brutal, and it brings out all kinds of these hidden sort of warts in the system. And SVB is a case in point. I mean, we know that the whole VC landscape was all completely nonsensical. I mean, we've spoken about it, from the time the last crisis happened, the ultra low rates basically propelled money towards the riskiest part of the market, which is the VC market. And, that led to all kinds of unmerited businesses burgeoning, and people either giving equity or debt also burgeoned alongside. And SVB obviously, was the beneficiary of that boom, and suddenly we found that it wasn't so. I don't think this is a structural problem that it affects, banking in general in the US. We know we had calls in the last week or even yesterday. Some of the banks were down, but the quality banks like JPM, when I last checked, was down only 1% or so yesterday. So I think the markets will discriminate. And they are doing that already. I don't think this is a large-scale problem. But the problems still remain, which is that we are in a bit of a pickle on the growth front globally, and of course in India. In India as well.
So when you say, Shankar, good morning. When you say, I love bear markets, are we in a bear market? I mean, how long, how treacherous, how painful is it going to be, you think?
Well, so the bad news is that we are not in a bear market, so we could head into one, but I don't think we are heading into one. So I think if you're talking India, which I think we are, I don't think we are anywhere close to being in a bear market. I think we are still okay. Of course, we will, give up some relative gains, which we found over the last, let's say, 12, 15 months when we beat the rest of the world. I think structurally, India is far, far better than most other countries, in the world, which will ensure that we don't have a bear market. Whether we have a roaring bull market or not, now that is a larger question. And I think the answer to that is that it's a clear no. I do not think we are going to have a roaring bull market. I don't think anybody rational should hold out that hope. It's a problematic market. India will do better than the rest, but whether the Nifty or the Sensex will deliver you 20% in 2023, I don't think that's going to happen. But that said, let me rewind a bit. Last year, we had a similar problem around this time, right? Which was the Ukraine war started, I think February, March. And the market sold off in the next 3 months' time up until, I think, June. June was the bottom. In that period, in those 3 months, I did a little experiment in which I put together a little portfolio of stocks which beat the market on the way down, small cap companies. And I was reviewing that list just like a couple of weeks back. And trust me, that portfolio has beaten the daylights out of the market. So the lesson or the model behind the story is that for investors, this is a very, very good time. Let the markets grind their way down, which I think they will. Maybe whether it's 10% or 5%, that's debatable. But they will grind down. They're not running up anytime soon. But the companies with good numbers and relative strength in stock prices build that portfolio from now up until the next 3 or 4 months' time. I think like my experience, your experience is going to be fantastic as well.
Okay, Shankar, that explains your tweet just before the show, right? You were saying you're in a good mood. So I guess I take that, that you need to build your portfolios. That's what our previous guest was also saying. But okay, let's talk about...
You look familiar.
I'm glad you still recognize me. Great to be having this conversation with you. It's part of the joy that we have being market journalists and business journalists. So great to be here. So Shankar, okay, help us and, rather investors around the country. How do you start building that portfolio? I mean, for the life of me, for starters, have not been able to understand why people are selling down Indian bank stocks as if there's a crisis here. It's a lot of it is probably sentiment, but where do you start? There's IT, which is exposed to the US, and there is the CapEx story, but stocks have already run up, the likes of ABB, Siemens, metals, again linked to global. So how do you start building that portfolio?
So I'm very clear, as I just said, there is no broad bull market that we can play. There is no broad bull market. There's going to be a narrow bull market. Okay, so let me give you a bit of history. Whenever you have a bear market or sideways market or moderately down market, it doesn't mean that there are no opportunities to make money. The only thing is that in a bull market, maybe 70-80% of the stocks go up and 20% of the stocks, are flat to down. It's exactly flipped around in a relatively bearish or a flattish market in which 70-80% of the stocks will deliver you flat to negative returns, or maybe 90% will, but 10% of the stocks actually do fantastically well, even in that so-called bear market. We are heading into a situation where we'll have fewer opportunities to make outsized gain, but it doesn't mean there are no opportunities, just that we will need to work harder. So the stocks or the sectors you're talking about are all big macro trades. And when there is no macro bull market, I think we are better off ignoring the big macro trades. I'm a big macro believer, but when I see that the macro trade is not going to work, I'm not going to waste my time looking for a banking play or an NBFC play or a metal play, because I don't think we are going to make serious money there. We are going to make serious money playing India for India, and which means playing India on a local basis, companies serving the local markets, companies serving their neck of woods. That is the way you're going to make money with niche businesses, niche products, smaller companies. They are not going to get anything which will give us like a $10 billion company becoming 30 billion.
Any
That's
examples,
not, we are not in
Shankar?
that kind of market.
Shankar, any examples with obviously due disclaimers? I mean, there might be companies that you're interested in or invested in, but any examples?
Oh, there are many examples, Surbi. I mean, I bought a company last year, for example, in the downturn that I was referring to between March and June. And I think it's up about 70-80% from the time I bought it. And it's an interesting business. It's a subsidiary of a global MNC, very small company, but subsidiary of a global MNC, good governance, good numbers, fantastic ROEs, still trades at 15 times earnings, and a product that I use personally, so I know a bit about it. With a globally scalable business, and the stock is still undervalued. And when you run screeners, you will find stocks of that kind popping up all over the place, in particular markets like this. So, I'm really, again, I repeat, I'm spoiled for choice in India. I'm really spoiled for choice. There are any number of companies to fill a 25 or 30 stock portfolio between 500 to 3,000, 5,000 crores of market cap with earnings visibility of 12 months minimum, and valuations which are not demanding by any stretch.
Got it.
Just work a bit hard. You are going to...
I think the only problem and the bigger question here is, should you be looking to buy those stocks now? And are you still bullish on small caps or non-index, say, mid caps, non-index large caps at a time like this? Or is it better to just stick with the large caps because of, all the challenges that's brewing globally?
Well, large caps haven't covered themselves with glory lately, have they? We had a big large cap, part of the market which imploded just like 45 days back, Sonia. So, there's no comfort in any part of the market in a problematic market. I'm saying, please go out and start to buy even now. Now is a good time. Tomorrow is a good time. Next week is a great time. You will not be able to get a perfect entry into good companies. But there are many out there. But I just want to underline one thing, and that's very important. Let's be clear about this thing. 2023-24, which is the next financial year, India's GDP numbers may surprise on the downside. Okay, that is my take as an analyst. What that tells you is, again, going back to the point that we are not going to get big, broad bull market, because, 4%, 4.5% GDP growth, which is what I think we will end up at, while the estimates might be 5.5% or 6%, I doubt if we are going to get there. I think with 4.5%, you're not going to see a big bank Nifty rally or a big, consumer rally or, the big macro trade rally in India. So I just want to be very specific that GDP growth in India probably will surprise on the downside rather than on the upside.
Sure.
I could be wrong, and I hope I'm wrong. But it doesn't look like that, looking at the last data print and looking at estimates even for the Jan-Feb-March quarter.
Okay, so you've confused us a little more. Don't expect a bull market, but there's not a bear market coming either. So I guess, you just have to...
So Sonia, Prashant was talking about a 3-year flat market. I mean, and let's hope and pray we don't get that, right?
No, I mean, most definitely no, Shankar. We don't want that. I was saying, there are difficult markets to report on, and I guess making money as well, right? I mean, unless, of course, it becomes very, very narrow and very, very stock specific, but that's what you're expecting. Not for 3 years, but for some time here in India. Sorry, go on.
For sure. Absolutely. For sure.
Okay. All right. Shankar, we'll leave it there. Thank you very much for joining us. Great conversation as always. Appreciate your time here on CNBC-TV18. Thanks indeed.
Let's just decide now not to draw any historical comparisons from now, right? Otherwise, we can go into a rabbit hole of what one can expect from here on. It may just change on a dime like the market has been doing for a while.
Yeah, but to change in a meaningful way, it needs to... intermittent sell-offs, intermittent kind of rallies may happen, but to change in a meaningful way, that may take some time. Take a quick commercial break here. By the way, the markets come off the highs by quite a bit. We are up just 16, 17 points, which is basically where we, I think, started earlier. There was a, I think, 50, 60 odd point move higher, but that's been given into. Vishal Thakur of Anupam Rasayan is the company we will be speaking with to discuss the business outlook with them going forward. And of course, our special segment, Charting Trends, will come up. Gautam Shah of Goldilocks Premium Research helps us decode charts and what he's making of this current episode of a sell-off in global markets. Stay with us.